just sent $599 to my friend, and that doesn't get to be reported to IRS. But if I send $601, just $2 extra, then the whole amount gets to be reported to the IRS. So then how does that happen? Let's break this down. What the real rules are and how they affect you. In the next 10 minutes, you will learn the new rules for the 1099K, when it kicks in and how much money triggers it, what money the IRS sees as income and what's not taxable, the real life stories where people got surprised with the IRS forms, simple tips to keep your records clean and avoid problems, and lastly, what to do if your 1099K form has wrong information. So let's just make it easy. No stress, just clear answers. I am Ella Rivkin, strategic tax planner, 10x certified business coach, and a real estate investor. For over 26 years, I have been helping business owners 10x their businesses, cut their tax bills, and multiply their profits. If you are ready to live a super life, I'm your go-to advisor. So let's start with the facts. The original plan was to require anyone who receives $600 or more through platforms like PayPal, Venmo, or any other paying platforms to get a 1099K form, even if it was just a few transactions. This rule was passed in 2021 under the American Rescue Plan Act. But the IRS delayed the full enforcement to give more time to the taxpayers as well as to the financial institutions until 2026 to implement this rule in full. All right, so what does it mean that the IRS delayed the full enforcement until 2026? Let's just break this down fast. So for the tax year 2023, which was already gone already, if you received the total payments up to $20,000, nothing was reported, you didn't receive a 1099K. In 2024, they reduced that amount. If you received payments up to $5,000, nothing gets to be reported. Everything over $5,000, you get a 1099K. Now for this year, 2025, and this is important because we're in 2025, if you receive payments under $2,500, you don't need to worry about it. But if the payments are over $2,500, you receive a 1099K, and this amount gets to be reported to the IRS. So now, starting 2026, that reduces even further and the full law becomes into the effect. So if you receive total payments of $600 a year or more, the whole amount gets to be reported and you do receive a 1099K. So the good news is the 600 rule isn't fully live yet, but there is coming and the thresholds are already dropping. So here's what's important to know and understand here too. It doesn't matter how many transactions you have throughout the year. What's important is the total amount of the transfers. In other words, let's say if you are sold something and then you receive the payment for that item, $2,500 in 2025, then the whole amount, $2,500, becomes a taxable transaction, and then you receive the 1099K. Now, what is actually 1099K? You heard me, I talk a lot about it, and I will be talking throughout this video. The 1099K form, it's a tax form that you as an individual or the business owner, you received from the vendor, from that payment platform that you're using. If it's a PayPal, it's a Venmo, Stripe, Square, Apple Pay, Google Pay, Airbnb, whatever platform that you're using, and they paying you. So what happens is that at the end of the year, they add up all the numbers and they send the form to the IRS. And at the same time, the same form, they're going to send it to you as the business owner or individual. And to add to that, there's one thing that I wanted to add to that is that Zelle is the only paying institution that does not report the 1099 forms. Why? Because typically when you use the Zelle, this is just a transfer between one bank and to another bank. So in that case, if you're using a Zelle, then you don't get to receive the 1099K. Let me just give you an example, and just through this example, it's important to understand. Let's say you as my client, you send me a PayPal payment of $2,500. So now what means is that the PayPal is going to report this $2,500 to the IRS saying, hey, Ella just got paid this much amount in this month. So what it means is that we cannot hide any of this, because whatever payments we receive through these platforms, all these payments gets to be reported to the IRS through this 1099K. So what triggers the 1099K and why would you receive one? If you received $2,500 in total payments throughout the 2025 year for the goods or the services that you sold or the services that you perform, then you will receive a 1099K. Now, before you will panic, let me just break this down for you. What actually becomes taxable transaction, what not, and if you will receive a 1099K or maybe you will not. So let's break this down. So what actually gets to be reported? So if it's a business transaction, then it gets to be reported. If it's a personal transaction, then it's not reported. So for the business, let's say if you're selling online, you're selling goods or the services and you're selling them obviously for profit, it becomes a business transaction. If you are freelance work payments, if you're doing freelance services and then you're receiving the payments for the services, then this becomes a business transaction and it's a taxable one. If you're babysitting, if you're, let's say, dog walking, doing tutoring services, or if you're receiving rent payments, if you are a landlord and you're renting the apartment, or let's say if you have a roommate and then you're renting portion of your apartment and you're receiving payments for that, that becomes a taxable transaction as well. Or let's say if you're receiving a business reimbursements, so that's a taxable transaction as well. So for example, let me just give you some real examples. So let's say Sarah, she sells a handmade jewelry on an Instagram and then she receives $2,600 through the PayPal in 2025. Then yes, this becomes a taxable transaction and she receives 1099K. So now let's go to the personal. So what is actually considered personal and what is not taxable? So let's say if you purchase something and then you use that item and you no longer need this and now you want to sell it and you're selling for less than what you actually paid for. So that's a personal transaction that's not taxable. Or let's say it's a personal gift. Your friend is sending you a gift, or your parents or your loved ones, family transaction, that's not taxable. If you're getting a reimbursement from your friend or from the family member, let's say you went out for a dinner and then you just split the bill and then you send a Venmo or PayPal, that's not taxable. Or let's say if you're paying back money to someone, if you borrowed money and then now you're repaying them back, that becomes a personal transaction. Now that I listed the difference between the business and the personal expenses and the categories, the key is to understand what is categorized as business and what is as personal. And whenever you're actually doing this transfer, this payment through PayPal or any systems, or someone else is sending you the money, make sure that they hit the right buttons and identify the right categories, whether it's the goods purchased or sold or the services, or it's a family or friend transaction. So for example, you and your friend, you went out for dinner and then the total bill for that dinner was $200, and now your friend wants to send you the $100, the portion of that dinner. So you just have to make sure that they click the right button and label this as it's a friends and family, because the last thing that you want to do is pay extra taxes on that $100 dinner that you just had with your friend. Here's where it gets messy, and this is where the big confusion comes into the place. Even though the $600 rule is actually the law, but which was passed in 2021 but didn't came into the effect yet, and as we already broke this down for this year 2025, the actual transaction that needs to be reported is only $2,500. However, some platforms follow this rule already. What it means is, it means that even if you received $600, which is less than $2,500 that needs to be reported for this year, they still report this amount to the IRS. So what it means for you as the tax preparer, that means that you need to be very careful. You have to keep the very good records and keep an eye on for this form, because you don't know, even if you receive this $600 for that sale transaction, business transaction, okay, you might be still responsible to pay the taxes on that. So my advice, assume that you will get 1099K, whether it's $2,000, $1,000. If you're hitting this $600 in business payments, then just be prepared versus being surprised. So now let me walk you through some scenarios so you know exactly what to expect. I'm gonna share with you the real world examples. So let's say, for example, the college student. Emma, she tutors kids and she gets payments through the Venmo. She makes $150 per month. So if we multiply this by 12 months, it comes out to $1,800 a year. Then in 2025, she will get a 1099K for the amount of $1,800. So again, as my advice, even if it's the law still says $2,500, let's just still assume that she might get the 1099K, and then she needs to report this on the tax return. So now let me share with you another example. So let's say Mike, he buys the sneakers and then he flips them and he sells them. So here's where the confusion might come into the place. So let's say he buys the sneakers for $100 and then he sells them for $200. So he makes a profit of $100. And then throughout the year, he does this 20 times. So now what happened is that the total sale amount is $4,000. So then what happens is that he gets a 1099K for $4,000. But the $4,000 is not actually, it is all taxable transaction, but since he purchased the sneakers, he has a cost of the goods sold, which is $2,000. So then the actual tax he would be paying on $2,000. It's not going to show the profit that he received because the IRS doesn't know his profit. What it will show is the total amount of the sales and number of the transactions. And in this case, it's going to be $200 per sneakers, 20 times, that it's going to be $4,000. So now let's talk about another example. Jessica. Jessica has a roommate and she shares and splits her apartment, and they split the rent payments with her roommate 50-50. She pays all the payments to the landlord, and then her roommate actually uses the Cash app and transfer her the money. So every month, her roommate pays her $800 monthly, including the rent and the utility. This is her portion. So what happens is that it comes out to $9,600 per year. If Jessica is just splitting this cost, this should not be reported as a business income, but what's important is whenever that roommate sends her the payment, she just needs to make sure that she's clicking the button that it's friends and the family. However, if Jessica is actually acting as a landlord and now she has a roommate who is not legally, officially, whatever, on her lease, and then she's just subleasing, then that becomes a business transaction and it becomes a taxable transaction. So now let me give you another example. So let's say Tom, he sells his personal items, furniture through the garage sale on a Facebook marketplace. So then he sold the total amount of $1,500 through the PayPal. So even though, based on the rules by the IRS for this year, it should not be reported to the IRS because it's less than $2,500. But then let's say if it was reported to the IRS and now he receives this 1099K for the amount of $1,500. But then he's thinking, you know what, but I didn't make any profit. I actually lost the money. So here's the kicker. The IRS actually doesn't know if you lose the money or if you don't lose the money. The IRS doesn't know how much you purchased the furniture for, how much you purchased the clothes for, and if you sold it with profit or not. So that's why it's very important to keep very good records and be able to add up all the costs and identify and know what's actually was sold with the profit or not, and then bring all these records to your accountants when you prepare your tax return at the end of the year. So what do you need to do right now? Okay, so your action plan. Don't wait until the tax season to figure all of this out. Okay, so the step one, clean up your payment categories. So go through your payment apps right now. Make sure that your personal transaction are marked as your personal. Business transaction marked as business transaction. On PayPal, check that friends and family payments are categorized and labeled correctly. Number two, start tracking everything. Download a simple app like maybe Mint, or even use a basic spreadsheet. Track every business payment you receive and every business expense you have. Because remember, IRS doesn't know how much you pay, what you buy, if you're making profit or if you're not making profit, if it's your friend or if it's a business transaction. So that's why it's very important to keep very good records. Step 3, save your receipts. If you are selling items, keep receipts showing what you actually originally paid for that item. If you are doing services, then track expenses, like how much you paid for the gas, for the supplies, if you had to buy the equipment, if you had to pay for someone for the outside services or for any kind of help that they perform for you. Step 4, separate personal and business expenses. So ideally, what I would actually recommend if you do have the business and if you do a lot of this is to have 2 separate bank accounts. So have your personal account and then have your business account. So this way it's going to be much easier because then all the business transactions will go through the business. So consider using different payment apps as well, and maybe even using a different credit card. So this way you can keep a very good track of all the expenses when you have that separate credit card just for the business. So now what actually happens if you do get a 1099K? All right, so if you get a 1099K, then don't panic. That's okay. It's absolutely fine. What you need to do is you just take this form, and then with all your income forms, your W-2 and all the other forms that you receive, and then you take to your accountants for them to prepare the tax return for you. So here's what the form looks like. The form 1099K, it will show the gross payments of how much payments you received throughout the whole year. But remember, as I already mentioned, if you are buying and selling something, it's not going to show how much was the actual cost of what you sold. So that's why it's very important, again, and I want to stress a lot on that, is to keep very good records. And these records that you keep, this is what you will take with you and bring it to your accountants when they're going to perform the tax return. Because based on that 1099K, if let's say you received the form and it shows that you received 100,000 in total payments, but then your cost of the goods sold that you sold was $50,000, then you want to make sure that you have all the records and the receipts that add up to this $50,000 that your accountant will be able to deduct to reduce your taxable income. So here's another thing that I wanted to talk about it is, so the IRS, and remember this, that the IRS gets the same copy as you receiving. So if your pay system is a PayPal or if it's a Venmo, what happens is they send this form to you, and at the same time they're gonna send the same exactly form to the IRS. So, I see this sometimes. I work with the business owners already doing all these tax returns for 27 years. And sometimes, some of them, they receive it. And then, sometimes they do just forget it, or maybe it gets lost, or maybe they didn't even remember that they received it, or maybe they just got lost in the email, or some just pretending that they didn't receive it. I don't know, whatever the reason is. But here's the thing. You cannot do that because IRS has exactly the same form. All of this gets to be reported to the IRS. So what it means is, if you file your tax return without actually reporting this amount that was reported, so what's going to happen is sometime in the summer, okay, because you have up until April 15 to file your tax return or to do an extension until October 15. And then if you file your tax return, and then you do not report this amount that you received 1099K on the tax return, that sometime in the summer, I would say like June, July, you will receive the letter from the IRS. And then that letter is going to show, okay, we have this 1099K. We have, let's say, 100,000 that was reported on that 1099K, and this is the amount of the taxes that you need to be paying. So here's another thing that I wanted to share with you. So let's say we're going to talk about the same example that we just talked before. So you made 100,000 and then you sold the goods in the amount of 50,000, right? And then your profit is only $50,000. Remember that IRS doesn't know this. They have no idea. So if you do not report any of this, when you actually get the letter from that, they will calculate the tax on the whole 100,000 that is shown on that 1099K. So that's why, as you see, it's very important again to keep all the records, okay, and to report everything, because this is your chance to report how much you earned and then to take advantage of all the deductions to reduce this amount that you earn so you can pay less taxes. So another thing I actually wanted to talk about it as well is some of you, depending, what type of payments you receive or what type of service activities you do, some of you might be doing freelance work or some side gigs, and then have the people just sending to you this Venmo and PayPal, even though it is a business transaction, but then you just ask your friends or your customers to report it as a personal transaction. So, based on all the rules and regulations, if it's a personal transaction, then yes, you're right, you don't have to be paying any taxes, and most likely, obviously, you're not going to be receiving this 1099K. However, what's important to understand also is these are all bank transactions. So yes, the IRS might not know about this, but here's what might happen. If at some point there is an audit, the first thing that typically the auditor asks for is for the bank transaction. So even though it was not reported to IRS, even though it's friends and family transaction, and if there isn't some kind of an audit, and then you show them these bank statements, and then they're going to go through the bank statements, and they're going to see that every month that you're receiving a certain amount of money, and especially if it's like, in this case, I would be talking about if it's like a large transaction on every month basis. So let's say if it's just 1-2 transactions a year, yeah, then obviously it's friends and family, nothing suspicious. But then if you're receiving every week $2,000, okay, and just treating this as a friends and family, that already looks like a suspicious transaction. And then it looks like, okay, you are receiving some kind of money, you're performing some kind of services where you're earning the money, but you're just not reporting them. So just wanted to share this with you. Just be careful because through the bank, even though you might not receive the 1099K, but everything still gets to be reported. And at some point, if there is some kind of an audit, it will all come up. And lastly, what I wanted to talk about it, so when you do receive this 1099K, and then if you see that the amounts are not right amount, so maybe there is something off, and if you are actually keeping all the good records, and then the next thing is for you is to reach out to this pay system, whether it's a PayPal, Venmo, or any other kind of pay systems, and then just to make sure that they correct all the amounts. Because another thing, obviously, you don't want to be paying taxes on something that you haven't earned. So the bottom line is, do not be afraid if you do receive this 1099K. The IRS isn't trying to tax you pizza money. They're just trying to catch people who make real income and they do not report this. If you are just splitting the bills with your friends or you're just selling old clothes, you are fine. If you are running a side business, then just keep very good records and report your actual profits. The rules are confusing because the government is confused. But you do not have to be. If this video helped you understand the 1099K mess, then hit the like button. And if you would like to see more videos breaking down confusing financial stuff in a plain English, then just subscribe and ring that notification bell. Drop a comment and tell me, have you gotten the 1099K yet? What's your biggest question about these new rules? And remember, financial freedom is all in your hands.